Hi everybody, so Guy here, the unknown, and today I want us to look at something very important. I'm just gonna go through a trade I took yesterday just to show you what runs through my mind because this is a strategy I recently shared, okay, 2 days before. So guys, on the channel we are now looking at three strategies. It's day three, which mostly is gonna be reversals, it's day two continuations, and it's this one, the explosive indice trading strategy. Okay, it's the most explosive indice trading strategy. It's actually a low risk trade. I know that most people are scared of indices because they're explosive, but this one is a low risk trade. Okay, it's mostly gonna explode. If you look at the community, into the community for the past 2 or 3 weeks, I've been sharing my trades, and it was like trading Nasdaq USD take profit being hit in 7 minutes, in 5 minutes, in 4 minutes. Actually, most of the time it's gonna hit your 50 pips in less than 10 minutes. So I fell in love with this kind of strategy because it's highly explosive, and you are in and out, then you can continue with your day, and it's actually now my most favorite one. Okay, so I shared it in my recent video. Right now I'm just gonna go through the trade I took yesterday. So guys, let me share with you something. Most of the time the Dow, the S&P and Nasdaq is actually gonna be correlated. That means most of the time they're gonna move in the same way, and when they do that, that simply means one of them is going to be leading. Okay, one of them is going to give you proof before, because as I said, we trade evidence. One of them is going to give you evidence before, and then the others will follow. So if that is happening, it's going to be very easy for you to get the trade, even if the correlation is negative, which simply means they're going to be moving in opposite directions. This strategy is highly explosive. Okay, so let me show you this, because yesterday they were moving in almost the same direction. Okay, so guys, look at this. This is actually the Dow. Okay, one thing I realized about this, we shared this in the video. You see here, they were trapping above the closing price. That's why they just drove people into the closing price and never visited that level again. So everybody who bought maybe this big engulf just got trapped. Okay, and they were never released. And then again, if you look here, this is also part of trapping. And as I've already alluded, this is the equity opening candle right here. I've removed the first hour on the I session indicator, and this here is 4 hours. So I actually left 4 hours. This is to simplify this whole thing. Okay, because I'm actually gonna be willing to take a trade after the equity time has opened. Okay, so I'm gonna go to a smaller time frame. Okay, this is a 5 minute time frame. So as you can see, same thing, they trap. They give us this beautiful slope, but I'm not gonna talk about it right now. You see, this slope is actually a very explosive slope. I shared that in my recent video. Okay, but look at this, when the equity opens, they shoot down. I told you I wait for the equity time, because mostly the equity opening candle is going to be the biggest candle, and it's mostly going to be a stop hunt, so you don't want it to go against you. Okay, so we are patient and we are sitting on our hands. Okay, so they've trapped above the level, and then again they've came to trap here, and when the equity open, they shoot down. Okay, at this time we are doing nothing. Okay, we are doing nothing. So one thing that happened, let's go to a 1 minute time frame. This is my favorite time frame, but I showed you how to actually focus on the 5 minute time frame, because the 1 minute time frame is mostly noisy for many people. So when this one shot down, I was doing nothing, and this caught my interest. Okay, this caught my interest. As you can see now, this is a trapping triangle. Okay, this is a trapping triangle, and now what we need is actually proof. So they did break down here, but they didn't break out actually with that huge engulf, okay, that we anticipate. And then they gave an engulf right here. Let's look at the time right here. Okay, they gave this. Okay, here, this was a news candle. That's why I couldn't execute here. Why? Because I didn't have that engulf, but this was a good trade, because sometimes if they don't give you an engulf, they're going to give you two candles, but the best one is when you get that big engulf. Okay, so this is roughly like a railroad track, and then they give you evidence that they're broken down. But I didn't take this one. Why? Because actually, if you look at the economic calendar, we had news at around 5 p.m. Okay, 5 p.m. South African time. That was actually USD ISM service PMI. Okay, so I didn't actually do anything. Okay, because I don't want to be getting in before the news. Okay, even though they've given me proof that they're breaking down, but I know that there's always room for a loss, and nobody's is actually immune against losses. Okay, so they could have, like, we can't guess news, the news could have broken up just to throw another stop hunt, or maybe they could have been planning to go up. Okay, we don't know what they had in store until they show us. Okay, so this news candle happened. It was a very big candle. I didn't really feel comfortable actually taking this news candle. Beside, I want to wait first. As you can see, this was a very big candle, roughly 60. Okay, roughly 60. So I waited for them to go down, and yesterday they were highly correlated. As you can see, this is where I drew my line, and this is where they break out. They actually broke out with this beautiful engulf on a 1 minute time frame. Let me just blow this up. Let me blow this up. Okay, as you can see, this is where they broke up. This is in itself evidence. Okay, but I didn't take this one. But I want to show you something interesting. This is where they trap. We spoke about this in my recent video. We spoke about this. If you watched that video, you know that we spoke about this. Okay, and let's see. Boom, 50 pips was hit in 6 minutes. Guys, I told you I love this. And the difference between a 1 minute and a 5 minute chart is that on a 1 minute chart, you're gonna get the entry early as compared to the 5 minute chart. Okay, as you can see, on a 5 minute chart, let's go to a 5 minute chart. On a 5 minute chart, here's the entry. So sometimes it's gonna take a little bit longer to hit your take profit, but again, 50 pips was hit, okay, in roughly 5 minutes. Okay, it's just that on a 5 minute time frame, this candle is gonna actually happen a little bit later as compared to a 1 minute time frame. But for most people who don't understand the 1 minute time frame, it's gonna be noisy, and you must focus on something that you understand. So this was a good trade, but I didn't take this one. Let's go to USDT again. I just want to show you this this setup, because it happens almost every day. Not every day, okay, it happens almost every day. In a week, it might happen 4 times or 3 times. This is a very high probable kind of setup. Okay, I love it, guys. I've been taking this for some time now. So when we look at trap volume, one thing we can see is that, okay, everybody going up here was literally trapped. Okay, and then when the equity opened, let's go to a 5 minute time frame now, because I want to see things, and the trapping part is going to be more visible on a 5 minute time frame and on a 1 minute time frame. So one thing we know is that, okay, they are just trapping, but we don't know what they're going to do. Okay, and then the equity time opens, and as you can see, we get the news candle right here. Okay, I waited for the news because obviously I'm not going to enter before the news. Okay, this is the news candle, so I prefer the 1 minute. For me, I love it, but guys, you can focus on the 5 minute time frame. Okay, if you don't understand the 1 minute. So as you can see, this was the candle, and they kept like going down. I don't chase moves. Okay, I don't chase move. Even if they are going down, yes, there are many opportunities for entry, but personally, I am not gonna chase moves because I don't know what they are planning. I want something that's repeatable. I want something that happens always, something I can rinse and repeat. This is why I'm not just gonna chase these moves. I told you I want to see trap volume, then evidence. That's what I execute. Okay, I am not chasing moves simply because yes, this was trending down, and it's a good trend actually. Okay, but I want to follow my own process. I have my own rules. Okay, and I follow my process. So as you can see here, this is where things got a little bit interesting. They trap. This is a 1 minute time frame. I told you on a 1 minute time frame, it's gonna be more visible. The trapping part is gonna be more visible. But when you go to a 5 minute chart, yes, you can see that, okay, they're sending people up, but if you're waiting for that evidence, you didn't really get it on a 5 minute time frame. Okay, but mostly you are gonna get it. Okay, mostly you are actually gonna get it. But look at what happened. The news had already happened. They have broken down. Okay, now we know that, oh, these guys up here are trapped, and they might never come back to them. Okay, so look, this is the trapping part. Then they break out with a beautiful engulf. Let me blow this up a little bit. You see, this is evidence. Okay, this is evidence. So one thing for me is I took Nasdaq because Nasdaq actually led. This candle happened before on Nasdaq as compared to the US30. I could have came and taken it on US30, but I took it on Nasdaq because this candle like happened first on Nasdaq. Okay, it happened first on Nasdaq. Okay, so I didn't take it here, but again, I just want to show you that this is a very beautiful trading strategy. You see, your take profit was hit in roughly 2 minutes. Okay, 50 pips in roughly 2 minutes, guys. This is beautiful. This is beautiful. I told you, don't be greedy. Why? Because once they've trapped, they're gonna punish them, but we don't know what they will do afterwards. Most of the time they'll go 60 pips, sometimes 70, sometimes 80. Okay, but yes, of course there are days when they'll go beyond 100, but that's not gonna happen always. So for me, as I always say, I want something that's repeatable, something that happens most of the time. And one thing I can assure you is that most of the time what's going to happen is they're going to go maybe 60, 70, 80 and then start reversing. Okay, so that's something which is important. I want something that's repeatable. That's why I'm telling you that I'm not going to chase moves simply because they are going down. No, I have my criteria. I want to see trap volume. Once I identify trap volume, I want to identify the evidence candle. Okay, most of the time you're gonna see this on a 1 minute time frame. It's just that unfortunately yesterday this on S&P 500, it wasn't much visible on a 5 minute time frame. It was more visible on a 1 minute time frame. Okay, so if you're using the 20 EMA, it's just an 8. I don't really need the 20 EMA because I know what I'm looking for. Okay, so this is a very beautiful trade, 50 pips hit in roughly 2 minutes. These are the trades I love. Why? Because this is a low risk kind of trade. Okay, in terms of your risk, it's gonna be something that I actually risk on currencies as well. You see, this candle was roughly 20 pips. Okay, so 20 pips for 50, that is hit very quick. That's amazing. Okay, but I took Nasdaq. I took Nasdaq. Yes, where's Nasdaq? Okay, let me show you Nasdaq. Okay, here I have okay, let's go to Nasdaq. I believe you can see how explosive these trades are. Okay, let's go to Nasdaq. I'm gonna show you Nasdaq because yesterday I took this one on Nasdaq. Okay, and as I said, I told you this session starts highlighting the equity opening for me. I've removed the first hour. Okay, so let's go to a 15-minute time frame so that we can see the entire day. And remember, we are not really relying on day count. We are relying on trap volume. So as you can see, everybody going up before the equity opens is literally trapped. How do we know that? We will know that if they are gonna be moving away from this volume. And somebody actually commented and said, can I actually do a video on trap volume? Yes, that's a good idea. I am gonna do a video on trap volume. Okay, and I'm happy and I thank you for that suggestion because it is important. Okay, so if you just see, you can see that okay, they're just, you see what they're doing. Okay, and everybody actually buying into yesterday's closing price is literally getting trapped. Okay, these people are not allowed to exit with a profit. Okay, so this is the most important thing. Now the session is opening. We're gonna go to a smaller time frame, which is roughly our 5 minutes. And by the way, we had news. Okay, I just showed you over here that we had news at 5 p.m, which simply means we are doing nothing up until 5 p.m. Okay, because if the equity is opening at 4:30, it's only 30 minutes to 5 p.m. Yes, of course, indices can go maybe 100 pip in a matter of 5 minutes, but we just want to be on the safer side. Okay, and we want to follow the process. Okay, so if you look at this is a 5-minute time frame. One thing you realize is that okay, they send people into trap volume, which is above the closing price of the previous day. Then they break down. Okay, they move down, they move down, they move down. But look at something interesting. On a bigger time, on a 5-minute time frame, honestly, we didn't really have those opportunities. But let's go to a 1-minute time frame where I actually took the trade itself. Okay, look at this, you see this is a creeping trend. I did explain a creeping trend in my recent video, and we did say the creeping trends will do one of two things. Okay, it's either they are gonna if you go to my recent video where I explained about creeping trends, you will see that I will explain that again. Okay, because when I explain it the second time, I believe it's gonna become it's gonna sync well with most of you. Okay, but this is a creeping trend, like they can creep, and then at the end one can just pull back and then pull back on the recent let's see, this is the low. Okay, they can just come to the recent low and not break it and then collapse. But on this one, I was not looking at creeping trend. Okay, because there's not much to look at when you're actually using the strategy, because this is the most easiest strategy you will ever find. Okay, the most easiest. What you need is to identify trap volume before the session, identify trap volume during the session, then identify the evidence engulfing candle. Okay, that's all you need for this one. That's all you need for this strategy. Okay, that's all you need, and it happens almost every day. Okay, almost every day. That's why I say it's my favorite. And another thing is, this one is explosive. You are in and out. Mostly 10 minutes your take profit will be hit, 15 minutes your take profit will be hit. Again, it's also based on the time frame you're using. So you see, this is where things get a little bit interesting. They are trapping. Do I know if they're gonna break down? Of course I don't. Okay, but I am waiting for evidence. Okay, because it's better when you say you don't know what's gonna happen. That actually keeps you sitting on your head until they give evidence. Okay, but if you have a thesis and you say they're gonna go down, remember, a thesis is like a directional bias. It's not guaranteed. Okay, it has to either be proven right or wrong. You know, if you are doing a research, you start with a hypothesis, and that hypothesis will either be proved right or wrong. Okay, so that's all a directional bias is. You don't really know what's gonna happen, but you have an idea of what might happen. Okay, so that has to be proven either right or wrong with evidence. I told you, we always look at evidence. Okay, so this is where my execution was yesterday, because I didn't take these other ones. But one thing I can assure you is that this candle actually shot out immediately right before the Dow the one that shot out of Dow. Okay, so this is the one I actually took, and my risk was like amazing, guys. It was roughly 12 pips. So this is something I really risk on currencies. Okay, so this is risk, like it's low risk, as I said. Okay, so as you see, they didn't really give me 50, but when they started like giving this W and this pin, that's when I knew that okay, now it's time to close it, because obviously they might be planning to go away. But they just shied away from my take profit with roughly 7 pips. So they literally went, I think it was roughly 43 pips. 40 something pips. Yes, they went roughly 40 something pips. Yes, as you can see, it was 44. So they just shied away 6 pips. Okay, so I wouldn't let my profits, like I wouldn't give them back just because of 6 pips. And besides, mostly what I do is I'll take it, get off the screen for an hour. But yesterday I happened to be on the screen, and because this move was broken down, and I just happened to be on the screen. Okay, because this one didn't really take time. It just went straight, and roughly it gave me that roughly 44 pips in just 2 minutes. So this wasn't actually a lot of time, so I was still on my screen. Usually what I do is I'll take it and then step out for an hour, close my charts. And one thing that helps me with is actually it stops me from actually over trading. Okay, so when they when they came back with this pin, I think I closed it somewhere here. I closed it with roughly 40 pips or so. Okay, but it was a very good one. This is what I call quality. It's just that, yes, of course, on Nasdaq it shied away, but most of the time it's gonna go to 50 pips. So this actually happens. Okay, I didn't even take it on the way back, because my criteria is trap volume, evidence. That's what I execute every day. Okay, so I just wanted to show this one because we explained it recently. I think it was on Friday or Saturday. I think it was on Saturday, actually. Yes, it was on Saturday. That's when I shared this strategy for the first time. Okay, so now I'm just showing you that this happens always. Okay, it happens always. It happens on a 5-minute time frame, it happens on a 1-minute time frame, it also happens on a 15-minute time frame. Remember, charts are fractal, so it doesn't really matter which time frame you are on. But unfortunately yesterday these moves were just exploding. Okay, so if you were on a bigger time frame, one thing you realize is that these moves were just exploding, and you might not have had the opportunity to take this. Okay, and that's something that actually happened to me yesterday. I was looking at what is that pair? I was looking at pound Aussie, the pound Aussie. Okay, let me see if I have it here, the pound Aussie. let me just show you. Okay, sorry guys, let me just show you something quite quick. Okay, I believe this might help. Okay, we know that okay, let's just go to a smaller time frame, roughly a 15-minute time frame. Okay, I just want to show you, I'm not gonna be looking at day counts right now. I just want to show you something interesting, okay, that really transpired yesterday when I came to the charts. For me, the most important thing is trap volume. Okay, yes, I do day counts and all sort of stuff, but one thing that will always stand out is trap volume. Once you are able to identify who's trapped, they're gonna get punished. So I saw this, you see, I'm on a 5-minute time frame. I saw this and I was expecting something like, oh, they should pull back and then collapse. So I didn't take this one because they just shot out. I could have taken it, but I didn't because I was expecting like they will pull back and then lock the level, then go down. Okay, but it didn't happen on a 5-minute time frame. I'm just trying to show you that sometimes on a bigger time frame it might not really happen always. But if you come and look at a sorry guys, it's taking long. I don't want this video to go beyond 20 minutes. Okay, but anyway, anyhow, okay, I'm concluding in a minute. Okay, so it happened on a 1 minute where they broke up. Like you can see, this is that little pump where they pump and then they dump. You see, they dump with it's a sort of pin what, and but now this are actually two candles. Okay, so this dump is in line with the trend against trap volume. As you can see, this was just trapping on a 5 minutes. You can see this pins and stuff. I don't really like pins, but I want to see who is trapped. So you can see that, okay, everybody buying into the previous day, into yesterday's closing price, which is Friday's closing price, was trapped. And this is what I really love. Okay, so I didn't really get it on a 5-minute time frame. So this is just to show you that sometimes the 1 minute will present more opportunities, but again it's all about understanding it, executing what you understand. Okay, so I literally took the one on Nasdaq. It gave less pips, okay, because I took the profit at roughly 40 pips. But had I taken the US 30, because they were roughly trading in the same way, I would have got my 50 pips. You see, this is actually the let me show you. This is actually the evidence candle, this one. Okay, yes, they started by consolidating, but again, this just exploded, and that's the psychology, that's the thesis. These moves will just explode. You see, here they did hit 50 pips, but even for mine on NAS, it didn't really go beyond 50. It just went roughly 44, but it was good. Okay, it was good. It was a good one because I followed my plan and I'm happy about it. Okay, I'm happy about it, no complaints. Sometimes, yes, of course, they won't go to the extent that you are actually anticipating, but it was a very good one, guys. Honestly, it was a good one. And yeah, so I'm done right now. I'm done, and I thank you. Okay, I just wanted to show you that these things happen always. Okay, almost every day you're gonna get this, and this is the easiest trades you can ever get. Okay, this is the most easiest. Once they trap, obviously they're gonna just punish these guys a little bit, but you stop losses because nobody's immune to losses. They can still do whatever they want. Okay, but as I say, I just wanted to share. Okay, because I believe that if you see this most of the time, it's gonna actually gel well, and everything will start making sense. Just go and put some time on this and you'll see how it works. I love this kind of setups because they are actually explosive. 7 minutes, you got your 50 pips. You can use any lot size provided you're following proper risk management. Okay, you can use any lot size because these ones are highly explosive. They are highly explosive. Once they give this, they are gonna explode. Okay, so yes, yesterday there were news and like the moves were just going down, and I also had a feeling that, okay, I'm trading like I might be at the low, but it was good. Okay, it was good for me. So yes, these are the kind of trades I was actually talking about. And now just please go back, put in the work, back test, do all sort of stuff. And once you start seeing these ones, believe me, trading will never ever be a problem to you. It's just gonna be a hobby. It's just gonna be easy. It's just gonna be enjoyable. Because for me, honestly, since I've started taking these ones, even if I don't take anything based on the currency, if I don't have clean setups, I know most of the time I'm gonna get 50 pips from indices, and besides, 50 pips on indices is nothing, and it's just gonna explode in a matter of 4 minutes, 7 minutes, 15 minutes. You're gonna get your 50 pips. Okay, so I really I would advise going and looking at this kind of strategy. It works. Okay, it works. So this is what happened yesterday. Even today it might happen, but if we can't identify trap volume during the session itself, then we don't have anything. Okay, the most important thing, I repeat, is staying patient. Staying patient. We are waiting for the equity time. Okay, don't feel pressurized, don't feel like, or don't give into your emotions like now you are missing. No, just stay relaxed. Okay, stay relaxed, wait for the equity time. Okay, identify trap volume before the session, it's fine, and then identify trap volume during the session itself, because once you have this trap volume, chances are, even if maybe the opportunity is going to the upside, you know, you want to get out of it before they can even get to trap volume, because most of the time they are not gonna go and release them. Yes, yesterday they came to them, but of course they haven't released them up to this far. Okay, they went later and maybe release them because already they have punished. Okay, so most of the time they are not gonna release them, so that's something worth noting. Okay, so that's why we identify trap volume before the session opens, which of course most of the time is gonna be on at this level, the closing price of the previous day. Okay, so once you identify this, now we are left with identifying trap volume in the session itself. And then once we are able to do that, we want to see the evidence, which is the engulf. The pin for me means nothing. I don't care about these pins. Okay, and I never execute based on pins. Okay, I want to see this engulf that shifts zones from these guys who are literally trapped up here, and then I just want my 50 pips. If they don't go beyond giving 50 pips, then you have to know when to close the trade. Okay, so guys, all in all, I really appreciate you, and I wish you a very beautiful week. And of course, if you master this, every week is gonna be amazing for you. That's why the previous 2 weeks I've just been sharing 50 pips, and I've been saying like, this month has been amazing, this month has been amazing. This will happen most of the time. Okay, so let me not waste your time. This video was supposed to be less than 10 minutes, but you know me. Okay guys, I really appreciate you. I thank you a lot. Have a beautiful day. Thank you a lot.